All right, well, welcome back, you guys. It's Randy Hatada here at Xpand Realty, sharing some of the concerns that's going on in our world today, specifically to Las Vegas and housing. Today we have a special guest. His name is Brian Affleck with Apex Delta Insurance. Is that right?
Correct.
Does that mean you're an insurance broker?
Correct.
And you own your own company?
Correct.
Okay, so we're dealing with an entrepreneur.
Yep.
So you are not the actual carrier.
Nope.
You broker for carriers.
Right.
Okay, makes sense.
Yeah, so when people are getting mad at carriers, don't get mad at me. I didn't do it.
Just blame Brian. We'll give you his contact info at the end of the end of the video here. But I got a disclosure for you, Brian. There's a real reason you're here today, and I got to share it with you. It might catch you by surprise.
Go for it.
You're actually here to sing a one-liner of a song for a contest we're doing.
Uh-oh.
April Fools, bro.
You don't want to hear me sing, I'll tell you that.
Well, I could have done that better, but it is April, and we're gonna have fun today. That's how we're gonna roll out this informational, and yeah, we'll just roll.
We should have fun because insurance isn't always the topic of conversation.
It is for me, and that's why you're here. Like, it is a major topic of conversation. Something that is not. We're not an expert in that field. That's your world. So hopefully you can help us at least navigate some of the questions we're getting, and just learn more about that industry, your industry. Yeah. Well, let's start with, right now is April, you guys, and it's supposed to be spring and warm, and we just battled our way to the front door through wind and rain. What's going on, man?
It's also, I guess, let's leeway into it. That's why we have insurance, because you never know what's coming.
Dude, you're bringing in rain clouds or what? Oh my God.
It's really windy today.
It is. It's freezing. I just saw the weather report, and it said 50 degrees, but feels like 45. And it's true.
That's why I'm wearing a sweater.
I wore my pink shirt today, and yeah, for the first time, I'm not prepared. That being said, let's be a difference maker today. See that? And add value to the world.
Let's do it.
All right, so question number one, and this is something we get from clients all the time. Why is my homeowners policies going up so much? Is it true that they're increasing?
Yes.
Okay. And by how much?
So how much is kind of a relative question. Everybody has their own.
Generally speaking.
So generally speaking, it's about, I want to say, from what we've seen in car insurance, it's 40 to 80%. Home isn't going up that much, but between 10 and 20% year over year right now.
I thought it was like double or triple even sometimes.
Well, it depends on what we're looking at. So you got to take in claims into consideration. You got to take in, a lot of companies use credit report too, right? So if your credit changes, they run that report. As far as year over year costs, they're going to look at all of your different factors. So like I said, credit, has there been a claim? What area of town are you in? It's something that people don't realize also. A lot of carriers, what they do is, if you have, I don't want to throw any names in here, but if you have one insurance carrier monopolizing a certain neighborhood, they're going to make it more expensive because now they have way more insurable interest in that area. And if something happens, they're more likely that they're going to take bigger losses, right? So what carriers are now doing is, if they say your neighborhood has 10 homes and that insurance carrier insures 7 of them, to get an 8th one in there, they might not even allow it. They might say, we have too much in that area already.
Well, never took that in consideration.
Something they're doing more and more these days, yeah.
Oh.
And it's crazy because you don't think about it, because we live in a pretty decent sized, good city.
I honestly thought it would be like more like, hey, we got this neighborhood covered, so now we got control, so we can up prices.
You think that, and I think that's how it might have started years and years ago, right? But now, because of how many claims people actually do put in, and people call in claims for a lot of different reasons that maybe they didn't need to, right?
Yeah.
Because, if you're uninformed and you just don't know and you think, hey, I've got insurance, why don't I use it? That's another reason, like I said, claims, that's why it goes up. But so if you're going to have a monopoly in a certain area, it's going to either increase the rates because they're now scared that there will be a loss and they're going to have to cover it, or they won't cover it at all.
All right. Sounds like fun. So rates are going up, and they're going up by how much, homeowners insurance? And generally?
Let's say 10 to 20%.
Okay, that's not too bad.
It's not too bad, but it still makes a dent.
Because like insurance to me is expensive, but homeowners insurance to me is affordable when you compare to auto and everything.
Well, when you
else.
look at what it's for, right? I mean, a home purchase might be your biggest purchase you're ever going to make. So to pay what might be expensive annually, and I never tell somebody how much is expensive or how isn't or where to spend their money. But the way I look at it is, if your home's $3, $4, $5, $6, $7, whatever it is, maybe the $800 to $1,500 to $2,000 you're going to spend a year. In heaven forbid you never need it, but if you might, that dollar amount really isn't that bad. In hopes that you get, if there is a loss, like a real loss, that you'll get covered for it.
Yeah, I mean, it's basically hedging the what ifs, right?
That's exactly what it is.
Yeah, and nobody likes it because nobody wants the what
Right,
if.
and you never want to have to get that back, but you have to hedge your bet.
You gotta, right? And especially if it's the biggest investment of your life, right?
And for most people, I think buying a home, they say, is the biggest investment, right?
Yeah, what else would be bigger than that, right?
I mean, maybe buying a business, but that's not everybody's
having
cup of tea,
kids
or having kids. But you're having kids in that home you bought. Now we're talking, we're talking multi-million dollars.
Oh, man. All right, well, rising premium costs, check. The other thing that I've been told, and I've been actually witnessing, is that we have a lot of clients that their carriers are no longer offering home insurance and they're exiting the industry. I'm sure that's a true statement because I've seen it, but what's the rationale behind that?
A lot of things as well. Claims. So we had the highest inflation we've had in a long time, the last bunch of years.
Inflation.
Inflation costs.
I don't like that word.
And then nobody does. And then we also had a bunch of losses catastrophically over the country in the last couple of years. So what happens is, if one carrier is big in one region and they had a huge loss, so we have to pay for it on the other side of things. You don't necessarily see that in big checks, but $7, $8, $9, $10 a month might add up over time, right? So
everybody makes up the difference for that loss.
Technically speaking, everybody makes up for that difference, because even if insurance carriers, in order to be solvent, have to have the proof of funds, but it also, nobody expects these big kind of losses, right? Like the North Carolina floods or the fires in California. And so if you... Lahaina as well, correct. And I mean, that was the first one we saw in a long time, where those fires were, devastated the city and the country and the state, right? And so if you have, again, maybe you're a carrier that was really focused in that area, right? And then obviously with the COVID, where people were staying at home and they weren't working and they lost, incomes and all that coming together, and then with the rate increases as well, these carriers said, hey, we're looking at it from a loss standpoint. It doesn't make sense for us to cover in this area.
Yeah.
And they'll come back. And I think, though, I've looked at it objectively, and I've talked with other insurance agents, and I think what's going to happen is eventually there's going to be one carrier that says, you know what? And I think it's starting. We're starting to see it again. We're coming out of the worst insurance market we've ever been a part of. And so a carrier is going to say, hey, nobody's in that area right now. Maybe we can kind of go back in there and start doing what we can in that area. And it's going to be more expensive probably, but they're going to be the monopoly in that area.
So to me, like when we talk real estate, which, let's just talk about real estate. I always talk about supply and demand. For insurance, I'm sure it's the same. So the more carriers you have, the more competitive the environment is. So the better the pricing would be.
Yeah. And so that's another thing we're finding too, is if there's 3 carriers writing and there used to be 6, the 3 say, hey, I know there's only 3 of us, we can probably make it a little more expensive, because they have to cover the cost, right? Because they know if there's only 3 available of 6, they're going to have more
market share.
More market share, which means there's going to be more likely of a loss, and they're going to have more likely of a payout.
Wow, it's a different way of looking at things from the inside.
It's funny, when you get into insurance, you start seeing things from risk perspectives first.
Yeah. Something I didn't know growing up. We learned the hard way, right?
Yeah.
If it's hot, we touch it. Well, that's what I did. Now I'm starting to learn. All right. Well, you guys, comment below if you have more questions. We'll get you answered up. I mean, some of these we're just going through the motions, and I've already know some of the answers, and some I really don't. So I'm learning along the way as well. So thank you.
Yeah.
One huge issue in our industry, especially for our investors right now, is vacant properties, right? And we'll buy a home, we'll close it, we'll buy an insurance policy, and then there's a vacancy period. Usually, if it's a rental, or even if it's owner occupied and they have to move in or they're relocating and it takes a few months. and somehow the insurance carrier finds out or asks about it, and they don't like it. They want to drop the insurance. So tell me more about that issue.
So a vacant home has more likely of vandalism or theft or squatters, which is obviously very hard to remove. So there's a little increase in premium in that. But the other thing with a vacant home is that there are ways on certain policies, and I think this comes back to knowing your carriers as an agent. Is a lot of them will say, "Hey, is there a move happening, or is it sold property?" Right? Because if it's sold, they understand it's going to be vacant maybe until the new homeowner gets in there, or the new landlord takes over, right? Or the new renter and tenant.
I mean, for sale.
Correct. If it's for sale, they know that there might not be a tenant in there, right? So some carriers allow more than 30 days. But the reason that they're a little more expensive is because there's nobody living there to water. What if there is a water leak, right? Nobody's there to check on it.
Yeah, it happens. We deal with it.
Yeah, and so that's kind of why it's a little bit more expensive, because there's nobody there day to day taking care of it.
Yeah.
Or watching for them.
I mean, that makes sense to me. And what it sounds like is the right thing to do is call the carrier and let them know, hey, I'm listing property, it's going to be vacant, or it hasn't been rented yet. A lot of people don't want to do that because they know premium's going to go up, or they might get dropped even worse.
Yeah, in my world, I don't see it a lot being dropped for those reasons, because carriers know people buy and sell homes, right? Tenants, they come and they go. I always say let them know, because if they don't know, that's when they have issues. But yeah, you're right. People, I think what it is they hope if I just don't say anything and nothing happens, we'll be good and we'll sell and we'll move on, right?
And hope they're covered if something happens.
Correct. And so technically in the course of a sale, you'd be covered most times.
Yeah.
Because it's not, you can't be expected to change a policy every 5 days if
I guess
you
the better,
and sell it tomorrow.
the more you disclose, the
more
better
you
coverage
disclose,
you get.
the better you're off.
But most likely there will be adjustments to that policy financially.
Possibly. And the other thing is, most carriers, if they've insured you, and a move is a drastic change, but a tenant isn't so much of a drastic change, because they know that if it's a landlord policy, tenants are going to come and go. But they do prefer long-term tenants, again, because there's less likelihood of a vacancy, or there's more care if the tenants live there longer.
Well, I mean, this is the real deal, guys, because we run a lot of investment properties. We work with a lot of investors. We work with property management. And so all that being said, you're actually one of the people that we call when our carriers find out property's vacant, and they'll drop our investor. And again, in this case, they'll drop the policy once they find out it's vacant. Even if we tell them it's temporarily vacant, it's being advertised right now, we should have a renter soon.
Yeah.
Some carriers drop it. And then that's when we've called you and you've kind of like found some kind of policy.
Yeah, and that's when you have to know, I guess, what carrier to go to that allows that. Right? Because some carriers don't want it. They don't want a vacant property, but others will be okay with it. And there are certain carriers out there that specialize in vacant.
We're aware of that. Those are more expensive, though.
Well, they're going to be more expensive for the reasons that we've talked about, but yeah, they're available.
Yeah. So it's not common to have a policy for that vacant period and then change it. Now it's occupied to an occupied policy.
You can endorse it.
Okay.
So an endorsement means just a little change.
Okay. So I guess the best advice anyone could give a client, an investor, or even owner occupant is talk to your insurance agent and ask these questions, figure it out.
Yeah, and if you think about it, if you say it's vacant for 60 days, right, and you call your company, the carrier or your agent, and they make the change endorsement for 60 days, and then there's a tenant that comes in and you re-endorse it to change it back to now it's a rented property. That 60 days of premium change won't be that much. So enough to make sure that you're covered, but also probably not enough to hurt you.
So it's worthwhile to disclose.
Always worthwhile.
Yeah. Just like real estate, disclose.
Nobody wants to be in the dark, especially right? if I'm covering a big cost of your home. I don't want to be in the dark and not knowing what's going on.
Yeah, in real estate transactions, we have property disclosures, and for sellers, the more they disclose, the more protected they are after the closing, because I said so.
Right.
I told you so.
Right.
All right. Well, I guess same thing there.
And emails go a long way, because you can't fake an email.
Get it in writing.
Yeah.
Get it in writing.
Get everything in writing.
Yeah. How about second homes? Because second homes usually stay vacant for long periods of time.
Yeah.
there's policies specific for that reason.
That's exactly right. So there are carriers that write specific secondary home policies, and they know that they're going to be vacant, and they write them with the knowledge of, hey, it might not be occupied for 60, 90, 120 days, something like that, right?
Right.
But they do also have requirements. Some of them ask, how often are you going to be here, right? And they expect that as your burden, that you're going to be there that amount of time.
Gotcha.
I write a lot of secondary homes because, before people started moving here all the time, they came here on vacation and they fell in love with the place, and which I understand. I love it here.
Yeah.
But so we write a lot of secondary homes, and there are certain policies that will write your secondary home with the knowledge that it's a secondary home, and it's important to make that distinction.
All of this is happening, and it seems like we just came out of a few major catastrophes, right? And I think this is the reaction to those basically fires. Yeah. Even in my hometown, like we've had volcanoes and stuff like that, and my family's been victim of losing a home based on that as well. So I think because this is still fresh, with California, Lahaina, all these things going on, we're feeling the reaction now, right?
Sure.
Financially.
Well, yeah, you feel it afterwards when your policies need to pay out and you're looking for your rebound and your recourse, and hey, listen, we went through the worst thing we've ever gone through. Now we have to come back.
Yeah. So we're feeling the wrath of these major things happening. All right. Well, I don't want to spend a lot of time on this one, but I have a lot of clients, friends in Hawaii. I'm from Hawaii. And there's a lot of properties that are uninsurable. And a lot has to do with mid-rises and high-rises as well. Do you know anything about that?
Yeah, so every carrier does their I'm blanking on their assessments, right? And they know what kind of, what type of land they like, what kind of roofs they like, what kind of area they like. So not every carrier wants to insure in every area, but there are carriers that will. So something that a lot of people I think are unknowledgeable about is that they have admitted and non-admitted insurance. They're both good insurance. They're both going to pay out on claims, but what the difference is that admitted means the state allows it and has the backing, and non-admitted doesn't, but they're still good insurance policies.
All right, so let's talk about Las Vegas specific. So my understanding is that Las Vegas is lower risk for natural, what's the vocabulary? Natural events such as weather events like hurricanes, tornadoes, and earthquakes.
Yeah.
Is that true? Lower risk.
Yeah, I would say lower risk. I always tell people, just as a general conversation piece, that we're very spoiled here. We don't get hurricanes, we don't get tornadoes.
We don't get tidal waves.
We don't get tidal waves, obviously, being in the middle of the water here. No, but we do get high wind. We do get our torrential downpours in the summers. But they don't really, some of those torrential downpours I've seen have effects on homeowners and car insurance claims and stuff.
Yeah.
But most of that, we're pretty lucky here. So we're not really, one of the big things going on in the country now is wildfire scores in insurance companies. A lot of areas, Arizona, California, Texas, the Oklahoma, the wildfires based on the brush is more like, we have it a lot here near our mountains is kind of where they look for their assessments, where the home is uninsurable because of the wildfire score. And that's one of the things we're dealing with because carriers are still a little behind on that. So a lot of the things that we look for in a carrier is, do you cover wildfire? And so what it means by wildfire, is it likely that there's going to be a fire in that area? And most of the time the answer is probably no, but they still have their scores and they either won't cover it or will charge more for it.
So I feel like that's one of the blessings of living in Las Vegas is that we have less of those type of risks.
Yeah, I would agree.
Weather risks.
Yeah, I would agree.
Yeah. Yeah, we don't have much shrubs and grass and trees to burn in the first place. Yeah, so I don't, likelihood of that happening is pretty low. Not saying that we can't have a fire.
No, and of course, things happen, right?
Right, yeah.
But the exactly like you said, the likelihood of a natural disaster being the reason is very low.
Cool. I know a lot of clients have also asked about the mandatory requirements for insurance with lenders. And I think you brought that up as we were walking in, that you get that. What specifically is the question about it or concern?
Which part? So I guess to just go off our conversation from before, a lot of carriers aren't writing policies or are claims these days. If there's one claim on a policy, a lot of carriers won't take it. Some carriers will, some will go
okay.
2 or
So
3.
to go backwards, let me read my exact note
Go ahead.
about what people are asking. So like mortgages require insurance policies.
Yes.
And if they let it lapse, mortgage companies will inject a mandatory policy from their side,
Yeah.
which is more expensive.
Yeah. And not always necessarily going to cover you for what you need, because it's just a policy they throw in there. So my theory, as not a lender, and I'm not knocking on lenders, but mortgage companies have a small insurance arm and they make a lot of good money on it. So if your policy lapses or you don't have one or it cancels and you don't go out and get a new one, they will force place one, which is still an insurance policy, but it might not be exactly covering what you need, or you don't have an agent really to speak to, and it's a lot harder to deal with.
And it might cost more.
And it will cost more, yeah.
Okay. All right.
Yeah.
Well, that's fair. All right. Well, that's a lot of the majority of the questions that people are asking us, and thank you for answering that. And this might be a little off topic for real estate, but my understanding is that we have one of the most expensive auto policies in the country, and the reason is that we have the most accidents in the country.
Part of the reason we do. There's a couple states that are up there. We're of the highest in Nevada. When people come to me from out of state and I get referred to somebody and they're from Ohio or whatnot, I always warn them. I said, hey, just so you know, I will do my best, but it's going to be more expensive. And it's just one of those I got to let you know ahead of time, because that sticker shock is real. And the reasoning is there's a couple things. One, people don't like to acknowledge this one, but it's true. Litigation is high, so people can sue people over anything, and they will. And two, there's a lot of great attorneys in town, but there are the ones who also will take any case and go after any dollar amount you have. But three, and we were talking about this morning with an attorney friend of ours, but in Las Vegas specifically, I think the number I saw recently was like over 50% of drivers, and this is all inclusive, 50% of drivers either don't have insurance at all or are heavily underinsured. And so what that means is if you're driving around,
I think he said 20% don't have insurance.
Don't have insurance at all, right?
That's crazy.
And then so the rest of it it's very underinsured.
That's crazy.
Right? This is why we're paying higher insurance premiums, because I had a client a couple weeks ago who got T-boned, completely not at fault, but they carried state minimum, which is $25.50, right? And so the person who hit them also had only $25.50, and there was 8 people involved.
So explain $25.50.
So $25.50 is your state minimum insurance. It's your bodily injury and your accident.
Up to $25,000 and $50,000.
$1,000. Yes, I'm sorry. And so if you go to an attorney, they will first look at how much can be taken from the party at fault, and not taken just to take into their pocket, but to cover medical bills or the cost of a new car or whatnot. And if it's underinsured or not insured at all, it's going to come out of yours. And if you don't have underinsured coverage, so underinsured and uninsured motorist coverage means you on your own policy are protecting against somebody who also does not have coverage or is underinsured.
Yeah, the irony is, and this is probably just the way it works, is that I've been through some major accidents, and by fault of my own, and coincidentally, we get sued for the exact amount of our coverage. Right.
And so that's what an attorney will do, is they will call the insurance company and find out exactly what you've got, and they'll go after all of it because they can. And that's what you're insured for. So I always recommend, now I'm not saying this from a perspective of an insurance agent, I'm saying this as a perspective of somebody to make sure you've got your bases covered. Get as much as you can afford, right? Yeah, insurance is expensive, but cover yourself, because there are a lot of people who will cause a wreck and drive away, or will cause a wreck and have nothing to, and you have to make sure that you're safe. And
you're the one that has all to lose.
Correct, and you're the one that has all to lose. And I always say the insurance premium might go up a little bit, but it's worth the coverage.
Yeah.
To know that you feel safe or you feel okay. If heaven forbid you need hospital bills covered and then a new car on top of it and all that, you want to make sure you have that taken care of. And that's one less worry if heaven forbid you're in a bad situation.
Right. Nobody likes talking about this stuff.
I do.
But I know I don't as a person,
Right.
as a human.
As a human, nobody, correct.
Nobody likes talking about the negative things that could happen. Kind of like medical stuff, you don't want to talk about the what ifs. Hey, I could do this, I could do that. We could catch this,
Sure.
But it's such a relevant conversation, because if you're not protected before something potentially happens, that's even worse.
Yeah, and like you said earlier, you're hedging your bet.
Yeah. And
your bet is you.
Yeah. Hopefully you're worth it, right?
Yeah.
All right. So the other thing that I wanted to ask you, the last thing I probably want to ask you, and I say probably because as conversations go, who knows, is that specific to Lahaina, which is a example of general issues, a lot of people, or not even Lahaina, even in California with these recent fires, people are not getting made whole on what their property is worth for a multitude of reasons. And that's a big issue. And for example, in California, say someone's home is worth $3 million, it burns down, they're not getting back the full $3 million based on depreciation or maybe a code infraction or all these different things. And so they're getting a fraction of those funds, and to continue their lifestyle, a lot have chosen to move to Las Vegas because they're getting compensated less. They can buy more here. And so that's the main reason why it's happening. And that has overnight changed our luxury market specifically. So is there any advice or anything that you could share about like just getting compensated and getting made whole with situations like that?
So that's a fantastic question. And there's a couple of things that come to mind first off. One, I can't speak for every carrier. I can't speak for any carrier individually, but I can speak from, doing this for about 12 years. The first thing is always have a check. Check your insurance probably annually. Every time it's up for renewal, have a check on it. You never know what's changed. The other thing that we do know is that prices keep increasing. So there's two kinds of policies on a homeowner's. There's actual cash value and replacement value, right?
Right.
Replacement value means that it's going to replace for what it was worth when you got your policy.
And replacement value could be more than cash value or less.
Could be, and it's based on the insurance carrier's assessment and perception of what it's worth, right? Now, also remember, this is something that I talk to people all the time. If you bought your home for $500,000, how much of that was land, right? So land doesn't burn down. So they don't include land in the assessment of your homeowner's policy. So say your house was $500,000, your purchase of your home was $500,000, your insurance policy might only have to be worth $400,000 or give or take, right? So that's one thing that comes in with the replacement cost value. But the thing that I always say is look into actual cash value, right? Now you can, as the insurance broker, we can go over that and put that number in for what it should be on an accurate level, right? I mean, you're not going to allow it to go, if you purchase your home for $500,000, you can't put $1 million in there, but you can put an actual value on that. And what that does is it allows your home to be worth what it is worth today, not what it was worth when you got your policy originally. The other big piece that a lot of people don't realize is you have in your homeowner's policy something called personal property. Personal property is your couch, your TV, your computer, technically your dog, other things like that, right?
My vault of gold bars.
Your vault of gold bars is a big one, right? And that one, I would always take pictures. Everybody does. People think, hey, I have $300,000 of personal property in here. It's technically a percentage of your total of your value. But take pictures of everything, because the only way to prove anything in a claim is to say, hey, this is right here, right? So the people aren't being made whole because the insurance company, as much as they're covering you.
Aren't there like companies that actually do that for you and they take inventory and valuations?
You can, 100%. You can find those ones online and whatnot. I always say it's just easy enough to take a picture because you're not going to keep the box from your Samsung TV that you bought 8 years ago, right?
Yeah.
So take a picture of it, the serial number, and then heaven forbid you have a real loss. You have proof that you had all that stuff.
And how often do you do that? Because
when you get someone new, just
who
take
does
a picture.
that, right?
Nobody does that, but I tell everybody to do it. Nobody does it, but I tell people to do it. It's big because it's a newer a mental note that I make a lot now is after the Lahaina and the Californias and the North Carolina floods, people were not being made whole, like you said, right? And you pay for this insurance, which is supposed to cover you. So take pictures, document everything, just put it, send it an email file to yourself and delete it off your phone so you're not wasting space kind of thing.
Right.
That way you have your proof.
And that's why, like, on the real estate guys, like, be very careful, because a lot of people in Lahaina got hurt by code infractions or non-permitted.
Also, check your policy every year, like we're talking about, because things change year over year.
Right. And so do things the right way. Don't take shortcuts is my point. And get things permitted. You get an ADA unit, additional dwelling. Do it the right way. So not only are you in compliance, but if something happens, you get made whole right at the end.
Yeah, and I think the insurance is 100% supposed to be, you pay for it, they give you back when you need it.
Right.
So let it work for you.
Right. And the truth is, a lot of times, like, insurance is businesses, and you know, when it comes to payment, it's your word against theirs unless you have the proof.
Correct.
And I guess it's a good idea to have proof, but again,
document everything.
Yeah, again,
It's extra work.
No one I know does that.
Right,
you know?
it's extra work and nobody does it. But I do a lot of educational. I learn a lot about insurance. I do a lot of reading. And I was listening to a video last week, and she was a claims adjuster, and she said, "Look, I'll tell you the number one reason why people don't get made whole is because they don't have proof of what they had."
Right. I mean, that makes sense.
Yeah.
Yeah. I mean,
And you can say you had a safe with a million gold bars in it, right? But if you can't prove it, nobody's going to pay you back.
Right. Proof is in the pudding.
Proof is in the gold bars.
All right. Fair. Well, that's all I got for you today, and that's a lot, actually. It helps me a lot, helps our clients a lot. Hopefully, you guys got value out of this. If you have any more questions for Brian, we're going to give you his contact information. Again, it's Apex Delta, Brian Affleck, and I would say reach out to him directly if you have questions, because I'm not the expert, which is why we have you here.
And I appreciate you bringing me on. I love to, just talk or go over policy, see if it looks good. If it doesn't, I'm not the guy who's going to say, just come to me and make the sale. I do, obviously, I love being an entrepreneur and all that, but I love being able to help.
Yeah, and I appreciate you, and that's why we give you a lot of business. I mean, we do have, for full disclosure, we have multiple people in the industry that we work with. But yeah, you're one of the guys that we feel pretty confident referring. So I appreciate your help and filling in the gaps as we need them.
Love to be of service, and I appreciate it.
Yeah. All right, well, guys, protect yourselves, and as for today, stay warm, stay dry, and if you want to know more about this topic, comment below so that we can get you answered up. See you soon.
Thanks for having me.
Thank you.